What's good, everybody? Welcome back to another video. It's been a while and I did get a haircut and a little shave. I need to shave again. But importantly, today is going to be a trade recap on all of the trades I took, the past 10 trades I took on my prop firm challenge. I bought my first ever prop firm, a $10,000 account for $47. I had a discount code, so it was like $12 cheaper than usual. But anyways, let's get straight into this. I'm going to be reviewing my trades, making notes, how to improve my strategy, how to improve my trading, how to improve my mindset, and the progress that we made so far. So without further ado, let's look at our FundedNext first ever prop firm. Let's go. Also, I'm trading in the New York session on the S&P 500. So let's check. So as you guys can see, we've got a $10,000 account and we have a 0.03% profit, $3 in total. I've traded for 10 days and a $0 loss. So here are my trading objectives. The max limit is 4% daily, which is fine because I risk 2% a day. My maximum loss in total is just over 8%, including the profit we made, and the minimum trading day is 5. It's already been 10, and we haven't even hit phase 1. Our profit target's 800, so we need to hit that sooner. But here's the account, and let's get straight into the trade. As you guys can see, I'm using the same format, except here I'm taking screenshots now so you can see. Our first trade was a long. It was a loss on the 27th of April. 2% loss. We had a bullish bias, which was correct. Entry signal. We entered off of the London lows, which were being interacted with, which apparently was not the best confluence. It was close to lows, which were later swept. 6.7 out of 10. Entry confirmation, not a good. Entered on an old break of structure and a barely inverse fair value gap, which actually wasn't a real fair value gap. So not so good. Position management, bad. Stop loss was decent, but I wanted too much of a high RR. Should have taken portions at London highs and suffered for a bad entry. That's a good point there. Thought process. I wanted to long off of London lows. I didn't have a clear target for take profit 1, so I missed out. On the London highs, which were hit. I wasn't my most high confidence trade. Lows were later swept with my stop loss. Bad entry confirmation, not the best trade overall. Didn't want to trade as Mondays often don't have the best setup. 6.5 out of 10. And overall, I rated it 3 out of 10. And I said it was a terrible entry. So here it is. As we can see, we touched London lows here. And I didn't make my take profit 1 up here. I ended quite early, as you guys can see over here. I think we can zoom in a bit. Oh yeah, that's nice. As you can see, we touched London lows here. And then we only got a break of structure here and this slight inverse fair value gap, which actually wasn't really one. So we should have been more patient and waited. We didn't have a 5-minute confidence on this trade. Plus, we didn't take profits at London highs. Shouldn't have taken this trade. And yeah, not a good trade. We lost. What note can we make from this? Don't enter without a clear 5-minute confirmation. Don't take trades that aren't worth taking. If stop loss is too big and take profit 1 has too bad of an RR, rather wait for another day for a better setup. Alright, so don't enter without a clear 5-minute confirmation. The reason I entered on that inverse fair value gap was because, as you guys can see here, we're trading on MetaTrader 5. Here's all the history. I hope it doesn't say my full name somewhere. Here's the history, profit, and all that loss, all that stuff. I'm not going to go into it, but just don't enter on low confidence. Our next trade, which was break-even trade, was on the 28th of April. Thank you very much. It was a 0.04% loss, basically break even. I had a bullish bias, which I said 6.5 out of 10. I thought there would be a stronger reaction off of the higher time frame support levels. My high time frame was bullish, with the middle time frames breaking structure slightly to the bearish side. Entered on the London lows, which were swept, and the daily lows, which were swept. 8 out of 10. Bullish bias, good to long. We entered on a 5-minute fair value gap and a break of structure, good entry. We had a good stop loss, which saved the trade. We had good management, just unlucky volatility, and it was not honestly a bad trade. Take profit 1 was at London highs. 8 out of 10. I wanted to long off of London and daily lows being swept. We entered on 5-minute confluences. Not a bad trade. We simply had low volatility and unlucky trade. Closed just before the market closed for about break even. Not a bad trade. Had a bullish bias for high time frames. 8 out of 10. 8 out of 10 trade. So let me just show you guys what it is. First, I go over the date. Was it a short or long? What's the profit and loss? What percentage profit and loss? What bias did I have? What entry signal did I enter on? What entry confirmation? How was my position management? How was my thought process? And overall, how was it? And then I put an image. So we're on the second trade at the moment. As we can see, we had a good stop loss right there. I think I entered quite a bit late on this one. I should really have entered earlier. Here would have been an ideal entry, but as you can see, we never got a confluence. Right here, there was a fair value gap, so we could have entered off of this for a better entry. But honestly, there was nothing wrong with this trade. The session was just terrible. It ranged the whole time and we closed for break even. So there's nothing really to improve there. Except maybe trade earlier. But honestly, I was just waiting for a high confluence entry on this. I hope these are all on the 5-minute time frames. I entered on this break of structure above this high, proving the fair value gap was effective. And here is our third one, was on the 29th of April. It's wrong there. It was a 2% loss. I had a bullish bias. It was incorrect. 5 out of 10. The move for the New York session was bearish. The middle time frames had bearish structure, and the lower time frame, 1 hour and mid time frames, had a bearish structure. We should have followed or waited for price to reverse to bullish. London lows were swept. We should have waited for daily lows to be swept as well. They eventually did. Not the best trade. We entered on a 5-minute break of structure, fair value gap, and inverse fair value gap. No, good confirmation, not gonna lie. However, I used it in bad context on a bad bias and signal. 8 out of 10. Position management, risk to reward ratio was quite low again. Not bad management though. We need to figure out how to use limit orders. Very important. 7 out of 10. And thought process. Wanted to long off of London lows and higher time frame support range, but we got our bias wrong. We should have been looking for shorts. Don't overanalyze high time frames. 6 out of 10. 5 out of 10 overall trade. And here it is. As you can see, these London lows got swept. And then we only entered all the way here after this inverse fair value gap. And a break of structure here. This was ridiculous. Our stop loss was way too big here. We should have made it smaller. And we got our bias wrong. So that was just unlucky. Daily lows were swept for the final stretch. So yeah. But we kind of entered on it projecting off of the highs. So what can we say here? Don't make stop loss too big. Also, go with the mid time frame trend / daily bias. Okay, we kind of got that one wrong. So that was on us. Fourth, we're almost halfway there. Let's go. It was a short. Hey, Watson. This was on the 30th of April. We shorted. We made 0.86%. All right. So our bias. We had no real bias. I was initially bullish, but I decided to short instead. 3 out of 10. A high time frame was still bullish, and we were at a support level. not good. We traded against our bias. 5-minute break of structure, inverse here value gap, which is okay. Let's honestly put 8 out of 10, nothing wrong with that. Take profit 1 was not so good. We entered with too little, less than 2% risk, and we should have targeted London lows for better RR. Stop loss was not bad. We had take profit 1, then stop loss at break even. Okay. I initially wanted to long, but grew impatient and decided to try follow short-term trend just to catch any move. So I entered short on a strong bearish 5-minute confluences. I should have stuck to my initial bias, waited for London lows to be hit, and then longed for a much bigger move. 4 out of 10, 3 out of 10 in total for this trade. So let's have a look. Where did we short? We shorted right here. That was an amazing, kind of amazing, for a good place to short, not gonna lie. But as you can see, we traded against our bias. Don't trade against bias. Rather wait for it to be confirmed. If not, don't trade. There is no rush in trading. You can't be rushed. You can't rush this trading process. Why is it doing this now? Oh. So as you can see, we did catch it at quite a good time to short, and we had take profit 1 with a lovely stop loss, which could have been a bit smaller for better take profits. And as you can see, I should have targeted these London lows instead of a 1-to-1 for a bit more profit. Apparently we entered less than 2% risk. Don't remember that, to be honest. But what would have been much better is if we stuck with our initial bias and caught along off of this break of structure, maybe up here or here, hopefully over here, and this inverse fair value gap right here. Caught along and longed all the way up here, which would have been nice. However, we still won this trade, so it was not the worst trade, but we did trade against our bias, so it was not good. Next trade we took was a long on the 1st of May. The 1st of May, that's this month. 2.26% profits. We had a bullish bias, higher time frame, so we're all bullish. 9 out of 10. We entered off of the London highs being broken and retested. Good signal, high confidence, 9 out of 10. Clean trade. We entered on a 5-minute fair value gap and a bullish lower time frame trend, 8 out of 10. Take profit 2, alrighty. Take profit 1 and 2 were set perfectly, but stop loss was set very low. So our RR was what was worse than what it should have been. The position management was good though. I placed take profit 1 at all-time highs with stop loss below London lows, but I could have placed them below London highs for a way better RR. We take profit 1, then stop loss at break even, then we moved to take profit 2. What do you mean then stop loss at break even? That's impossible. Then we take profit 1, then we take profit 2, trail stop loss into profit, and then we got swept in profit as price reversed for the rest of the session. 7 out of 10. Cool. I wanted to long with a bullish bias off of London highs. Let me just check we're still recording. All good. I wanted to long with a bullish bias off of London highs. Our bias, signal, and confirmation were all good, but our stop loss placement was the only thing that diminished some of our profits. Overall, this was a good trade. We had 2 take profits, which is great news. 8 out of 10. We should have placed a more risky stop loss as our conviction, all factors, and bullish trend were quite strong. 8.5 out of 10. Great. Let's have a look at this trade. So as you can see, super clean price action, break and retest to the pip pretty much of London highs. Then we entered on 5 minutes. I'm not sure what time frame this is, but we entered on 5-minute break. Wait, what? 5, 10, 15, 20, 25, 30, 30. This is pre-market. This is the 5-minute time frame. As you can see, we're in a bullish trend here. We never broke structure to the downside. So as soon as we closed a bullish candle out of this fair value gap, I longed with quite a big stop loss, and I take profits. We hit 1 up here somewhere, I think all-time highs here, and then 2 nicely up here. What we could have and should have done was placed our stop loss just below this purple line. I don't know if you guys can see. I think those were the daily highs, and if we placed it below that, we would have had a way better RR. We would have 1, 2, 3, and possibly even 4 take profits. So what I can say is place stop loss with confluence. What does that mean? If you aren't sure about a trade, don't take it. If you do go on a whim, then have a bigger stop loss. If you are very confident in your trade and all factors, including bias, trend, confluences, etc., are in alignment, then you can place a riskier stop loss for higher profits. I'm kind of getting from all of these notes, don't take trades if they are low confluence, and stop loss, don't make stop loss too big. It will eat away your profits, your RR, and therefore profits. Alright, that's cool. This was a good trade though that we just went over, and let's look at our next one, which was on the 4th of May. We took a long 0.54% win. Our bias was bullish. Our high time frames were fully bullish, daily and the 4 hour and the 1 hour. No, the daily and the 4 hour were bullish. The 1 hour just broke bearish structure, but we still had a bullish bias, 7 out of 10. Okay. We entered off of the previous daily lows, which are broken and retested. Daily lows. Okay, I see. And we entered on a nice big fair value gap on a higher time frames during London session and a break of structure to the upside. Not bad entry confirmation. 5-minute trend also switched to bullish. Position management was not bad. Stop loss was still quite big. Okay, this is something we really need to change. Stop loss was still quite big, so less/smaller take profits were hit, but we hit take profit 1, then stop loss at break even. Also, we only risked 1% instead of 2% because I was testing the validity of daily lows as entry signal. I've never traded off it before, and I should have risked our usual amount, 7 out of 10. Alrighty, I wanted to catch a nice bullish move within the higher time frame trend. We entered on the previous daily lows being swept, broken, and then retested. I was scared to take this trade, so I risked only 1% instead of 2 because I doubted the validity of daily lows as an entry confluences. Looking back now, it was a good setup and I should have risked 2%. I entered on as a 5-minute fair value gap was being filled and the structure turned bullish. Good trade, not too bad, 8 out of 10. Immediately before even looking, I want to say, don't doubt entry signals. Daily lows and highs, London lows and highs, equal lows and highs. Anything is a valid confluence as long as it is in line with your bias and conviction. Enter with confidence. You shouldn't enter with 1% risk or less than 2%, as this suggests low confluence trade, which you shouldn't even be entering in the first place. Less than 2% risk only on very special circumstances, such as when changing your strategy, etc., etc. I think there was one other thing I wanted to say. Let's see, stop loss, take over 1, risk 1%. All right. I think that's everything I wanted to say. Now let's have a look. Boo! I just had to have a quick intermission. As you guys can see, this purple line was the daily lows. And they were basically swept, and we entered off of that. In pre-market, daily lows were swept in line with this nice big fair value gap. Then we got this break of structure, and we entered on this. Nice. We had our stop loss, which was huge. Why was our stop loss so big? I think a reason for our stop loss being unnecessarily large is because of this stupid FundedNext. I don't want to call it stupid because I don't want them to deny my payouts if I get one. But the max volume you can risk over here. Oh, I don't think I can enter on the weekend. But look here, this two SPX 500. Say the market's over here, 7395, and we're going to put our stop loss there at 7385. That's $224. Okay, wait. Say we have a tighter stop loss. Boom. This is, I think, a decent trade. I'm not a decent trade, but this will work. However, we have $194. If we have an even higher stop loss and we need to increase our volume above 2, we can't enter. So our percentage suffers, unfortunately. Nothing I can do about it. I'll just have to do my research before checking out a prop firm next time. Alrighty, let's look at this next trade, 7th trade, the 5th of May. Took a long 3.5% win. Why is it doing this? Long 3.5% win. We had a bullish higher time frame bias, the daily 4 and 1 hour, middle time frames, and we had a bullish higher time frames. The daily, the 4 hour, and the 1 hour all bullish. The mid time frames and the 1 hour had a bearish retrace. The 1 hour structure just broke bullish after a good retracement, so 9 out of 10. London highs were broken and retested, 9 out of 10. We entered on a big bullish fair value gap on the 5 minute and a 5-minute break of structure. The trend broke bullish in pre-market after London session ranged, so it was a good entry, 9 out of 10. And let's look at this. Take profit 1. Take profit again was a little too big. Maybe, this is stop loss. Stop loss again was a little bit too big. However, get ready for this round. I honestly just explained this to you. I tried to make a smaller stop loss, meaning our lot size would have to be bigger, but it didn't let me. It seems our biggest lot size is 2 units, which might be troublesome in the future. Also, the RR targeting daily highs on TradingView and MetaTrader 5 was very different. TradingView was like a 1-2, and MetaTrader 5 was like a 1-1. Something ridiculous. Bad broker settings, 2 points. Another bad point for position management today. Because I hadn't set take profit limits, I manually closed take profit 2 way earlier than I wanted to. Bad management on my part. I should have figured out how to set limits as take profits. Also in the future, I want to change my strategy, less partials, higher RR, and less trailing stop loss. However, I hit take profit 1, 2, and 3, and I trailed my stop loss accordingly, closing the trade before sleeping at 10 p.m. to avoid swap fees overnight. 6.7 out of 10. I wanted to long off of London highs. I had a bullish bias, good entry signal and confirmation, good trade setup. This was overall a good trade, 10 out of 10. And overall, I rated the trade 8 out of 10. So let's have a look. MetaTrader 5. This is the higher time frame. We entered here. Break and retest of, what was it? London highs. Break and retest here. The London highs. Break, retest. We entered. Not sure where our stop loss was, but we could take profit 1, 2, 3, and then I closed right here just before going to bed. This is where the session ends, I'm pretty sure, and this is when I went to bed, so I just closed it before going to bed. Here, as we can see, take profit, stop loss was a little bit too big. I should have narrowed it down a bit. However, as I explained, the broker wouldn't let me because My risk would have been too little. Units were too big, but this was a good trade overall. Let's get to our last 3 trades. Next trade, the 8th trade was along the 6th of May. It was a 2% loss almost. I had a bullish high time frame bias 4 hour, and the 1 hour was bullish bias. This was a bad trade. London highs were broken and retested. 9 out of 10 signal confirmation. Entered on a 5-minute nice big fair value gap, but we didn't wait for break of structure. 1 out of 10. That's a 0 out of 10. We had a good stop loss. Take profit targets were yet to be set. 7.7 out of 10. And I wanted to long off London highs. All my confirmations were there except for the 5-minute break of structure. That's like the key something holding everything together. I was at gym and I thought I missed an entry, or that I would if I didn't get home and enter quick enough. This made me rush when I got home, and I forgot to look for break of structure on the 5 minutes. This was a bad entry. I was in a rush and I missed a key part of my strategy as an entry confidence. There was also a lot happening around the house. Always be calm and level-headed when entering, and make sure you tick all your boxes. 2 out of 10. We got swept, then price continued in our direction because we forgot a 5-minute break of structure. 3 out of 10. Before looking at it, let's just say be calm, level-headed, and make sure you aren't in a rush, ticking all your boxes and seeing what you want before entering when trading. Awesome. That's some good sauce right there. So let's have a look in a sec. Let's have a look now. Actually, as you guys can see, we entered on this nice big fair value gap right here. We waited a lovely long time. I was actually at gym here, so unfortunately, break and retest of the London highs. Yeah, break, retest, even respected the lows, but we never saw a 5-minute break of structure. Because look, we broke structure to the downside on this candle, closing below this low. Then a bullish and a bearish candle creates a high. Nothing closed above it. Bullish, bearish, high, nothing. No break of structure. I thought this was because I was entering in a rush. But then it swept us and continued in our direction. Where the true break of structure was actually on either this candle, this candle. So a good entry would have been to long, stop loss. Honestly, could have made it below this low, and take profit 1 would have been hit in that case. But as you can see, we entered here and we had take stop loss down there. So always be sober-minded. That's a biblical principle. Be sober-minded when trading. This doesn't just mean avoid substances. This means be level-headed. Think clearly. Enter slowly. Be sure. I think this is 1 Peter 5:8, but I'm not too sure. Let's have a look. 1 Peter 5:8. It says, be alert and of sober mind. Your enemy, the devil, prowls around like a roaring lion, looking for someone to devour. We got devoured on this trade, and we got to repent. Forgive us, Father. I think also my Christianity is definitely going to help me in my trading. 9th trade, second last trade, the 7th of May, we took a long, we took a loss, 1.72% loss. We had a bullish bias, which was incorrect. There was a 4-hour liquidity sweep to the downside. Daily highs were swept, and we should have been bearish, 5 out of 10. We entered off of London lows being interacted with, not the best confidence in context. We entered on a 5-minute break of structure, fair value gap, incorrect context, 8 out of 10. Decent stop loss and take profit targets, but a bad overall trade, 9 out of 10. And I wanted to long off London lows, but we got stopped out due to incorrect bias. I didn't really want to take this trade. It seemed like a low confidence setup, and a decent bearish setup shortly presented itself. I should have either been more patient, as I took the trade quite early in the session, or not traded at all today. Or in best case, I shorted. Daily highs were swept and London highs were touched, so there was a good short up setup that presented itself. We should not have taken this low confidence trade. 3 out of 10. I did want to enter super early, longing pre-market, which would have worked out and been better. Worked out better. I should have been more confident and ready on the charts, but I had FOMO and longed at an awkward time. Not good. Okay, there's a lot to say about this. First of all, what we're going to say is don't take low confidence trades. Don't take trades that you are unsure of. And the third one was, if you miss an entry, don't enter at an awkward time. Either don't trade or wait for a better entry. That's a lot of notes from this one loss. Very happy, very grateful. So as you guys can see, we got our buy strong today. We should have shorted instead of longing. We longed off of over here. This is the 15-minute chart, I think. No? 5, 10, 15, 20, 25, 30. 5-minute chart. The lows, London lows were interacted here, and we broke structure. We didn't break structure. That's why I didn't enter here. But I could have entered here with a stop loss below here. Take profit up here. We would have taken profit. We only entered up here because I was waiting for this fair value gap to get respected, which it did. It kind of inversed actually, but there was also a break of structure. We should have shorted, would have made money, or even waited for the lows to be swept and then longed. But this was a bad time to long because of the highs we interacted with. Should have at least seen a bullish movement of support off of the bottom of these London highs. And as you can see over here, we took a long and we hit stop loss down here. Last trade. This was yesterday, 7th of January, February, March, April, May. It was 2 days ago? No, it was yesterday, guys. How come it says, oh, I typed 7 instead of 8? Yeah, this was yesterday's trade, the 8th. It was a 0.5% win, not the best, but it was a good trade. We had a bullish bias, correct bias, higher time frames are bullish after retracement. Daily highs were broken and retested. London highs were broken and respected, so that was a good entry signal. We entered on a 5-minute inverse fair value gap, break of structure, and a 5-minute bullish trend. Stop loss was still a bit big, but I had to make it bigger because of the max lot size, which sucks. Meaning if stop loss is too small, risk percentage goes down, which sucks. This is a flaw of FundedNext. Take profit could have been hit if stop loss was smaller. We held the whole day until closing in slight profit at night before going to bed. 7 out of 10. I should have made stop loss below London highs for 1-to-1 and possibly hit take profit 1. I wanted to long off London highs being broken and retested, as it was in line with a 15-minute fair value gap, which didn't happen. The retrace didn't happen, it kept running. However, we did break and retest daily highs, which I used as my entry signal. The trade was good, we entered on a good retracement and retest of all-time highs. I wanted to long at the low of the session to bottom call, but it wasn't my trading plan. I will adjust eventually. 8 out of 10. A lot to digest here. As you can see, our stop loss was still too big. If we put it down here, a 1-to-1 would have been about here, which may or may not have hit take profit 1. As you can see, the London highs were broken and respected on the lower time frames. You can't really see it over here. But we did break and retest the daily highs beautifully, and we entered off of that. Respecting that. And here were the all-time highs. We also retested into them. Then it kind of just consolidated as it was a Friday, and we closed right over here before going to bed, somewhere around here. We entered here, we exited here. There was something I wanted to say. Don't worry about how the 2 lots max rule will affect trading. Keep stop loss where you would normally put it and rather sacrifice risk percentage. Okay, cool. So thank you guys all for watching. It was a bit of a long video, but I haven't uploaded a video in a while, so I just wanted to recap, make notes of all the things, how I could improve, and just check in on the journaling, see how I can improve my strategy. Now I know that I shouldn't enter without a clear 5-minute confirmation. That I always kind of knew, just error. Don't take trades that aren't worth taking. If the stop loss is too big and take profit one has too bad of an RR, rather wait for another day or for a better setup. Don't make stop loss too big. I think we should put that in bold and make it a bit bigger, because that's what I've been doing lately. Go with the middle time frame trend and our daily bias. Don't rush into trading against our bias. Rather wait for it to be confirmed. If not, don't trade. There's no rush in trading. Let's put that as well. There's no rush. Make it a little bit bigger. Place stop loss with confidence. If you aren't sure about a trade, don't take it. If you do go out on a whim, then have a bigger stop loss. If you're very confident and all factors, including bias, trend confluences, etc., are alignment, then you can place a riskier stop loss for higher profit. Don't take trades if they are low confidence, and don't make stop loss too big. It will eat into your RR. And therefore profits. Don't doubt entry signals, daily lows, highs, London highs, equal lows and highs. Doesn't really matter. Anything is a valid confidence as long as it's in line with your bias and conviction. That's a good point over there. Enter with confidence. You shouldn't enter with 1% risk or less than 2%, as this suggests a low confidence trade, which you shouldn't even be taking in the first place. Be calm, level-headed, and make sure you're not in a rush. Ticking all your boxes and seeing what you want to enter before entering a trade. Be sober-minded when trading. Be level-headed, think clearly, enter slowly, and be sure. 1 Peter 5 verse 8. Don't take low-confidence trades. Don't take trades that you are unsure of. If you miss an entry, don't enter at an awkward time. Either don't trade or wait for a better entry. And don't worry about how the 2 lots max rule will affect your trades. Keep your stop loss where you normally would put it and rather sacrifice risk. I think we made some good notes there. So thank you all for watching. My next post will hopefully be past phase 1 of the evaluation challenge, or failed, or hopefully not, failed the prop firm, and then I'll go into another one. But I'm thinking every Saturday to do a trade recap. If that's 5 trades, 4, 3, 2, 1, or none, then I won't post if it's none. But even if it's 1 trade, I'll post a trade recap. I'm saving all these videos for once I pass or fail the funded, because I don't want to be trading a funded account for the YouTube videos. I'm doing it for myself and for God, because God's will be done. Matthew 6:33, seek first the kingdom, and all these things will be added unto you. Even the Bible verse today, 1 Peter 5:8, be sober-minded. If we were sober-minded during that 1 trade, we would have taken profit. Trade with confidence, that's also biblical. If I trade in line with God's will, then I will be successful, because God is huge, and if He's on my side, even the markets can't be against me. So thank you all for watching. I'll see you in the next one. Cheers.